the pioneer of technical analysis in India, only on ET Now.
Well, we've mentioned different types of cutlery and crockery for you while discussing technical analysis, candlesticks, cups and handles and whatnot. Today we look at pitchforks. And what comes to mind when you talk about a pitchfork? Really, I think to me it's a trishul. So here's a picture of a pitchfork and see if it makes any sense to you. Very quickly, there's a median trend line that you will see over there, which is in the center. And there are two equidistant lines, trend lines, one on top and one below. Now, the median line is the center line, is the one that we spoke about, is made by basically taking 3 points. The first point is the low of the move. From that low of the move, you take two other points, which are the next high and the next low. That's the reaction high and reaction low. Now, the reaction high and low, you take the midpoint of that, and you take the first low, and you join those, and you get the center line, and you make a parallel line on top through the reaction high, a line below, which gives you the sort of support level, and the upper line gives you the resistance level, and once again you have a neat little band. Pitchfork, as it's called. Doc, how do you trade it?
Well, you see, pitchfork and the Bollinger Band both are actually sort of definition of context. You know, prices are prices, right? Now you need to know when prices are moving, whether they are relatively high or relatively low compared to what it was trading earlier. I think pitchforks and Bollinger Bands do an extremely fine job of defining when prices are relatively higher so that you can actually take profit or sell them, and when prices are relatively lower compared to what they have traded earlier so that you can look to buy them. So pitchfork as well as Bollinger Band, like I've shown you on this particular chart here, both of them actually define this situation in a very, very nice way. The Bollinger Band does it in a very curvy way, mainly because it is using, let's say, the moving average band, which is a curved trend line, whereas the pitchfork is a trend line based technique. So this is what you refer to as the median line. You have an upper parallel or a resistance line and a lower parallel, which is your support line. So all prices near it are support, all prices near the top line are resistance. The median line is somewhere like the middle line.
Right, and you can see the Bollinger Bands behind it. If you were to compare the two, which one would you prefer to use?
Well, they actually both signal a little bit of different from each other because the way they are to be applied are somewhat different. You know, if you're playing purely the support resistance game, then the pitchfork is the tool of choice. But if you want greater ideas about the trend, the strength of trend, volatility increasing, decreasing, and some ideas about what is high and what is low, then the Bollinger Band is to be used. So you need to know the usage, you need to know the philosophy behind the tools to apply them correctly.
Right. So basically what you're saying, and we had this discussion earlier, was that if you're looking at the pitchfork and you want to just use a very intuitive trading technique where you buy low and sell high, you buy your support and you sell your resistance, a pitchfork will do that for you.
Absolutely.
Quite often.
Absolutely.
Whereas the Bollinger Band, not necessarily. That's more just giving you an indication of the volatility of the stock and really whether you need to, whether a trend is established or it's about to break.
In fact, I would go so far as saying that the Bollinger Band should not be used as a support resistance band. This is a mistake made by a lot of people, and I would sound out a warning saying that the Bollinger Band is not designed to be a support resistance band, though it looks like one.
Because it's only two standard deviations.
Yes, it is under very, very specific conditions that you can use it as a support resistance band, as otherwise it is to be used with various other sets of rules like the squeeze, and you have the widening, you have the breaking, you have the tagging of the band, you have other sets of tools which go with it. There's so many other rules with it.
Right. One thing is clear about bands, and that is they always contain a trend, and the moment the band is broken, there's a strong possibility that the trend is reversed. And this is what we're going to try and understand really, that every time the trigger line is violated, it should send up a red flag as to something out of the ordinary is going on. And how do you play that then on a trade?
Yeah, on a pitchfork we have two very simple straightforward rules. First is the slant of the pitchfork. Is the pitchfork slanted downward or is it slanted upward? Now, if a pitchfork is slanted downward and the resistance line is broken, then we treat that as a buy signal. This is what I'm showing you on the chart here. If you look at it, this is a chart of Nifty. Now here is a pitchfork which is slanted to the downside, right? So this is your resistance line. and the prices come up from the median line, break the top end of the pitchfork. So this is what we call as a buy signal, or this is a signal of a change in trend. Now the change in trend may be short term, it may be medium term, it may be long term, that is irrelevant. What it shows is that this trend which the pitchfork is tracking is for the time being over, and this is deemed to be a kind of a buy signal. Let me also show you something very similar in terms of how it looks on the downside. Now here is a pitchfork which is slanted upward, right? So this is actually tracking something upward, and you see here that the prices have now fallen down and fallen below the lower support channel. When it breaks the lower support channel of an uptrending pitchfork, that's when the trend changes to the downside.
Now, just a quick question on this chart, Doc. You've got the points for your reaction high and reaction low. Why did you choose these 2 points? Because there are other highs and lows that you can see on the chart after the first point from where the pitchfork starts.
Actually, what I have drawn here is a pitchfork using intermediate pivot points, right? Now, you have a chart where you have series of minor highs and minor lows. So when you want to draw a pitchfork over a minor trend, then you will choose the minor highs and lows. When you want to draw it, across a larger period of the trends, like something I have drawn, which is across a few months here. So I am actually tracking the intermediate trend. So that is why I have chosen a low, a high, and another low, which is well apart by many, many weeks. So making each of those moves a kind of intermediate move.
Right. Okay, it's interesting to note that a trend break can happen in the direction of the trend itself. We've seen not this but the other thing before. Now let's see how this happens, like we've seen on the Nifty, which was in a downward sloping channel, and we saw the crack in prices in the month of August when it actually collapsed, and the exact opposite of that happened for gold, which was in an uptrend, and then finally it actually shot right through the roof at the end. So these are examples of trends which get broken in the same direction.
What we see in gold is that it has been into a tremendous uptrend, and the uptrend of this gold chart has been tracked very well by the pitchfork. And you can see that it first moved up to the median line, then went above that, took the median line as a support, went to the upper parallel line, where it should have met with resistance, right? But then it actually congests there and shows you an upside breakout. When you get signals like this, it is actually a signal saying that the whole thing is going to speed up even further, and which is what we are seeing in gold, and that move is even now on as such.
It's going on even now. All right, remember one thing about pitchforks is that they can be made along any 3 extreme points, but it's important to note that the slope of the median line should not be too steep, since this gives unsustainable trends. Also, the median line should be visited very often, as we saw in the case of gold, to give it corroboration and give it credence, as well as give credence to the channel.